Welcome back to the channel. Let's dive into a scenario that a lot of us probably dream about. Imagine you suddenly have like $10,000 to invest.
Oh, yeah, that's a great starting point.
Do you go the classic route with stocks or try something a bit riskier like options trading?
Both can make you money, but they're totally different beasts. I kind of think of it like choosing between a chill hike in the woods or a wild roller coaster ride.
Okay, that's a
Yeah.
pretty vivid image. So with stocks, it's like buying a little piece of a company, right?
Right.
And you're basically hoping that the company does well so your piece becomes more valuable.
Exactly. You buy 200 shares of, say, a company for 50 bucks each, that's your $10,000. Then if that company's stock price shoots up to $65 a share, bam, you've made a cool 3 grand profit just like that.
Yeah, a solid return for sure. But you mentioned options trading being more like a roller coaster. So what makes it so different from just buying stocks?
Well, options trading, especially with something called call options, it's all about leverage. Basically, a small change in the stock price can mean huge gains for you, but also huge losses. Let's say we stick with that same stock that's priced at 50 bucks. Now imagine there's this call option with a strike price of 55 bucks. That means you're making a bet that the stock will climb higher than that price.
So if I'm getting this right, with a call option, you're basically buying the right to buy those shares at $55, even if the market price goes way higher.
You got it. And the cool thing is you're not locked in. You don't have to buy if the price tanks. Now let's say this call option costs $1.20 per share or $120 per contract. One contract represents 100 shares. So with your $10,000, you could snag about 83 of these contracts. If that stock price jumps to $65, each contract would be worth at least 1,000 bucks. Because remember, you have the right to buy at $55 and then turn around and sell at the market price.
Hold on. So instead of pocketing $3,000 by buying the stock directly, you're saying we could be looking at something like $83,000 with options. That's almost 8 times the return. That's wild.
That's the power of leverage. But here's the catch, and it's a big one. Those options contracts have an expiration date, unlike stocks, which you could hang on to basically forever. So options, they force your hand. You got to make a move within a certain time frame.
Oh, I see. So if the stock doesn't hit that $55 mark before the option expires, you're out of luck, even if the stock price goes way up, like to $70 the next day.
Yeah, that's the risk. Your $10,000 could just disappear. And here's another thing. The longer you want to hold on to that option, to give your prediction more time to pan out, the more expensive it gets. You're basically paying for that extra time.
So it's kind of like insurance. The longer you want the coverage, the more you got to shell out. This makes the difference between stocks and options crystal clear. Stocks are more about slow and steady wins the race. Lower risk, but usually lower reward. Options are like high-stakes gambling. You could win big, but also lose everything in a flash.
That's a good way to put it. Now, one thing to remember is options aren't just about chasing those get-rich-quick fantasies. They can actually be used to lower the risk in your portfolio, like with a strategy called hedging.
Hedging.
Now,
That sounds kind of interesting. How does that work?
let's say you own a whole bunch of stock in a company and you're worried about a short-term dip in the price. You could buy put options. They're kind of the opposite of those call options we talked about. They give you the right to sell at a certain price. So even if the market takes a nosedive, you've locked in a selling price, you're protected from those big potential losses.
So options can be a tool for speculation if you want to go for those huge wins, but they can also be used to play it safe and protect your investments.
Exactly. That's what makes options so interesting, but also tricky. You really need to understand how they work before jumping in. It's not just about throwing a dart at a list of options and hoping for the best. Successful options trading takes careful planning, making smart decisions, and understanding what drives stock prices up or down.
So it's not just dumb luck. You're saying it actually takes research and a solid understanding of the market to make it work.
Absolutely. You got to be comfortable with things like market trends, company research, and all the stuff that can push a stock price around. It's all about having a strategy, managing risk, and not letting your emotions get the best of you. Remember, options trading, it can be a wild ride. You got to be prepared.
Yeah, it definitely sounds like a whole different ball game compared to just buying and holding stocks. You mentioned something about implied volatility and time decay before. What exactly are those and how do they fit into all of this?
Oh, yeah, those are biggies. They can really make or break you in options trading. Implied volatility, it's basically how much the market thinks a stock price is going to jump around. If the implied volatility is high, it means the market is expecting some serious price swings. Could be good, could be bad, depends what you're hoping for.
So if I'm betting on a stock to go up, High volatility could be my friend,
Yeah.
but it also means there's a bigger chance it could plummet, right?
Exactly. It's a two-way street. Now, time decay, that's the other one you got to wrap your head around. Remember how options have that expiration date? Well, as that date gets closer and closer, the option starts losing value, kind of like ice melting. That's what time decay is all about.
That makes sense. The less time you have for your prediction to pan out, the less the option's worth.
Yeah.
So even if the stock's moving in the right direction, you could still end up losing money if time decay eats away at your option's value before it hits your target price.
You got it. It's a race against the clock. And that's where the strategy comes in. You got to consider that implied volatility, the time decay, how the price might move. All of that goes into making smart decisions. It's not just about whether the stock will go up or down. It's about timing, analysis, being smart about those risks.
This is all starting to sound way more complex than just those get-rich-quick stories you hear about options. Seems like it's a lot more hands-on and strategic than just buying some stocks and letting them sit.
You hit the nail on the head. With options, you're always checking your position, maybe switching up your game plan, making decisions based on what the market's doing. It's more like a game of chess than just betting on a horse.
So if someone's thinking about dipping their toes into options trading, where do they even start? What would you suggest?
First things first, you got to learn the ropes. Do your research, understand all those different types of contracts, learn how prices work and all that. There's tons of stuff out there. Online, books, courses. Get your head in the game before you even think about putting any real money down.
So don't just jump in head first, like you wouldn't try to climb a mountain without the right gear and a plan.
Exactly. Preparation is key. Once you've got a good foundation, start small and maybe try paper trading. That's where you practice with fake money so you don't risk the real stuff. And when you do start trading, start with a little bit of money you're okay with losing. Don't go all in right away. Burg up as you get more experience and get a feel for things.
So baby steps, learn from your mistakes, and build those skills over time. I bet there's a pretty big mental game to options trading too. All those potential wins and losses. That's got to be a roller coaster of emotions.
Oh, absolutely. That's a big part of it. You got to have the discipline to stick to your plan, manage your risk, and not let your emotions take over. Fear and greed, those are your worst enemies in this game.
So it's not just about crunching numbers and understanding the market. It's also about being mentally tough.
It is. The best options traders, they're not just good at analysis, they've mastered their own psychology too. They can stay cool under pressure, make smart decisions, and not freak out when the market's going crazy.
So after looking at both sides of the coin, we got to ask the question, if you had that $10,000 burning a hole in your pocket, would you play it safe with stocks or go for that wild ride with options? What should our listeners be thinking about when making that decision?
Honestly, there's no right or wrong answer. It all depends on you, your risk tolerance, your financial goals, all that. If you're all about stability, like to keep things simple, and you're happy with slow and steady growth, stocks might be your best bet. But if you're a bit of a risk taker, you like the challenge of constantly buying and selling, and you're willing to put in the time to learn how it all works, options could be the way to go.
So it's kind of like choosing between a nice walk in the park and jumping out of a plane. Both fun in their own way, but definitely require different things from you.
Yeah, and no matter what you pick, the best thing you can do is learn about personal finance. The more you know, the better you'll be at navigating the market and making smart decisions that help you reach your goals.
Absolutely. And on that note, we've come to the end of our deep dive into stocks and options. Hopefully this has given you a better understanding of these two different ways to invest. Now you know a bit about the potential rewards and the risks, so the question is, if you had $10,000, what would you do? Stocks or options? It's amazing how something that seems so simple on the surface, like deciding between stocks and options, can actually be so complex. And honestly, we've only just scratched the surface of options trading today, but even from what we've covered, it's clear that it's not something to just jump into without really thinking it through.
Yeah, options can be pretty exciting. And yeah, you can make a lot of money, but it takes a lot of work to really understand them. It's not some magic get-rich-quick scheme. It's more about having a strategy, knowing how to handle risk, and making the most of the opportunities that come up in the market.
And I think that's a really important takeaway for our listeners. Whether you're drawn to the steady reliability of stocks or the more adventurous world of options, it all boils down to choosing the right investment based on your own personality, how much risk you're comfortable with, and what you want to achieve financially.
Exactly. There's no right answer for everyone. It's about understanding your own financial situation and making choices that help you reach your goals, whatever those goals might be.
Well said. And on that note, I think we'll wrap up our look at stocks and options today. Hopefully this has given everyone a clearer picture of these two investment paths and maybe even sparked some interesting questions about your own financial journey. So now that you've heard about the potential rewards and risks of each approach, the question is, if you had $10,000 to invest, which path would you choose and why? We'd love to hear your thoughts in the comments. Thanks for joining us for another deep dive. We'll see you next time.